Hey guys, I'm Angelo, and welcome back to Crypto Coin Consultants. Today, I have the pleasure of being joined by Krown of Krown's Crypto Cave. Krown, thanks for coming on.
Happy to be here.
Alright, so today we'll be talking about technical analysis and whether it does really work or not. So before we get started, Krown, tell us a little about yourself.
Okay, cool. So first things first, thank you for having me here, Mr. Angelo.
My pleasure.
And my story, who am I, where do I come from, why do I even have the opportunity to talk here right now? Well, my name's Krown. I actually have a first name as well. It's Erik. Pleasure to meet you. Anyways, ever since I was young, I'd basically been involved in trading. My father was a trader on the Pacific Stock Exchange. So every summer, ever since I was about 10 or 11, I'd actually put on the jacket and go down to the floor and be a clerk for him. All the way up until about college, which I actually spent a few years at University of Oregon, actually 6 years to be exact. Fun times. And where I kind of like, based up on reading on technical analysis, I knew that it was something that I wanted to have involved in my life. It was one of those skills that I was always taught, this is something that you can always come back to, right? You can always come back to this. And through, and after a little bit of experimenting in college, decided that, I did actually graduate with a few degrees, but I decided that I didn't really want to go through with any of that kind of stuff. I graduated with a degree in business and economics, and then I actually started to do a little bit of pre-med as well. And I was just like, all right, well, I think it's time to leave now. And so once I left, I basically started harassing some of my connections at the floor of the New York Stock Exchange ARCA, which is an options exchange, where market makers are doing business with basically what's it called? Oh my God, what's it called? Brokers. There we go, brokers. Yes. And so I harassed some of my connections down there. And I was lucky enough to get one man who created his actual market making software himself to basically take me on and teach me in exchange for basically me just doing everything that he said for the next few years. So I got to sit next to him and learn pretty much everything from him, and that was just an invaluable experience being around those kind of people, and obviously meeting everyone else on the floor. Nowadays the floor is like a lot different thing that you see on some Wolf of Wall Street or trading places. It's certainly not it's not as active anymore. It's very, very small in comparison to what it once was. Everyone's kind of on the computers now, but the people that it did put me around was invaluable. I've always learned throughout my life, if you ever want to learn a subject, if you ever want to get better at something, get around better people and they will teach you. Or if you can, just get around them and any way that you can. So I basically worked, for peanuts for some of those guys, or for one of those guys for a while, and in exchange he kind of taught me everything that he knew, and after a little bit of time I felt more confident on my own. I moved over to Chicago, started trading above the Chicago Board of Options Exchange, which put me around a set of a lot of other really interesting people as well, who I got to learn a lot more from. And after a while of doing that, maybe almost a decade later, I decided that while I did love doing that, and I definitely did love trading, there's a lot of the overhead and regulatory stuff that I did not enjoy too much. I didn't enjoy necessarily not being fully independent. So I found crypto just by happenstance, really. One of my friends was kind of always grabbing my attention and saying, hey, come check this out, man. It's exploding right now. There's crazy things going on. And finally, I actually took the plunge, made an account on one of these garbage exchanges way long ago. And now, a few years later, I'm still here. Okay,
nice. And so does everyone, from your background of traditional markets, does everyone have somewhat of an understanding of technical analysis?
No, actually not. Market makers, typically speaking, and this is one of those things that I always laugh about when you go on Reddit, people always talk about the market makers, they're manipulating the market against you. No, most market makers don't even care to even understand technical analysis, because all they're doing is running off of their algorithm that they program, and they just want to lock in things, lock in an arbitrage between different exchanges, different, derivatives, and do it all delta neutral almost immediately, and their algo is going to pull that in basically faster than they can even really do it themselves. They're just kind of there to check up on it. So in general, they really don't. They're doing a whole different strategy. Now, I will say this: the guys who were doing technical analysis, they could really goose that like much more in their favor. So the guys who are just running an algo, they might be looking for like 5-10 cents edge here and there. The guys who could do technical analysis, they could do like, you know, $50, $1.50 type cent, you know, edge on that, which is just astronomical when you're talking about, you know, options, because it's, you know, each contract is timed as 100, you know, and then you're doing it, you know, however many times. So there you go.
Okay. And now what do you, what exactly is your response when people tell you that technical analysis doesn't work, or it's just kind of a fairy dust or whatever? What is your main argument when people say that?
Right. Yes. I've had this conversation before, as you might imagine. And typically I tell them, you're right. It doesn't work, because I say that in a little bit of jest, of course. I say that in a little bit of jest. Now, I'm at the point now where I honestly don't even want to even entertain those conversations, because I can just say, well, this is what I've been doing for the last 10 years. I mean, if it doesn't, I don't care if it works or doesn't work. If it works enough for me to make a living off of it, then that's good enough for me. So that kind of brings me to the first really big point, is that just by the nature of believing in it in a way creates a false feedback loop, right? So
believing in it, in that it works or it doesn't work.
If one person believes in it, and we're gonna go like super meta right now. If one person believes that it works, it kind of creates, in a way, a false feedback loop where it perpetuates itself to where it doesn't even matter if the technical, you know, indicators that you're looking at, or even just the technical setups and everything, or even just, you know, looking at price, volume, and time, which is what they're all derived from in the first place, works. Because if one person who might be a very big account is using this kind of base their trades off of, well, then I, by the nature of it, probably being, you know, not as big of an account, I have to pay attention to what he's doing within those, within that. And what I can find that through is, hey, the technical indicators. So if he's using that, and I make the assumption that he's using that, even if I don't believe it works, it will still work just by the nature of one person using it. So that's a very, very basic, you know, example right there. Obviously, this is a market of millions and millions and millions of people. So you'd imagine that, you know, it really just takes a few. Now, at the end of the day, it's not perfect. Just like anything, it's an art, not a science. So that means, you know, and you could probably figure this out yourself. It's like if you use technical analysis, or if technical analysis was perfect and all you had to do was just learn the inputs and just do this when this happens, it's 1 + 1 = 2 every time. Everyone who did it would be rich, and most people, you really can't get around that fact. It's certainly possible, but it takes a lot more. Just like anything, it takes a lot of, you know, of practice, a lot of just hammering in all of the little details here and there over time, and it starts to come together. So going back to that whole idea over there is, you know, it does create a false feedback loop, because if I think, again, if I don't believe that it's real, but I think that you might be doing it, and I might think that, hey, your indicator, your RSI is oversold over here, so you're just gonna, by the nature of it, be a buyer because of that. Well, I might base a decision off of that, even if I don't believe technical analysis is real. I might say, hey, well, if he is gonna buy there, what if he's buying a lot and he front runs me? Well, then I gotta get in my order over there too, because I don't know what's gonna happen after that. Okay. So it's good enough to make a decision off of at the basis of it. Now, of course, when you actually get into the nitty gritty of these technical indicators, there is a lot behind it. You know, the saying volume precedes price, there's a lot of truth to that. There's a lot of truth to that. And you'll see it in the charts. You'll see this, you know, if you look at these things long enough, I don't think I've met a single person who's actually studied this for a decent amount of time and not come out thinking, this actually kind of works sometimes. So it's one of those things. And I'm just kind of looking at the charts right now, watching Ethereum dump. Fun times, life of a trader.
Okay, so tell us what you meant and expand a little bit on when you said volume precedes price.
Okay, volume precedes price. It's an ancient idea. So basically, to boil it down to like a very simple explanation, when a bigger account, and I'm not going to use the term whale because I just don't like it, but like a bigger account, like someone with a lot of money, deep pockets, comes into the market, they step into the market and they start saying, hey, I want to buy. Well, how is that going to show up in, like, what is that going to show up like, right, in the charts? We have actually a measurement for that. Volume, right? So when they start accumulating, when they start buying up, and when they start packing up their bags and saying, hey, we're done accumulating, we're ready to mark this thing up. Well, what happens after that is you see the big volume spike and price follows. Price just initially follows. You see volume break that next resistance and price starts to rally in favor of that, typically speaking. Now, this is, again, a very, 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 very basic analogy here, or example here, I should say, not analogy. And at the end of the day, yes, it's a lot more complicated than just that. But my point is, it kind of lays a basis for all of technical analysis, because all of technical analysis it's right in front of you on the charts: price, volume, and time. And I do want to make a distinction here, because a lot of people think that technical analysis is some sort of like crystal ball, palm reading type thing. And that's not what real technical analysis is, or at least in the way that I do it. Of course, there's all different types, right? There's all different types. There's people who are doing, what's called classical. There's people who will literally just look at, price, volume, and time. There's people who will do like a few indicators like the RSI, MACD, that kind of thing. And there's people who go like super like Elliott wave, projections, harmonics, all these sorts of advanced patterns. And in my experience, what has worked best is the simplest things, quite literally.
Okay. So you're saying that heavy volume leaves a sort of residual ripple effect, correct?
Yeah, exactly. Think, and that's a great word that you just used there, ripple, right? Because it creates that analogy of like riding behind a ship that's already moving. It's easier to kind of follow along that path. Whereas like if you're on the side, you have to create your own path, right? But with that ship already pushing everything in front of you, good to go.
Okay, cool. So what's your argument or response when someone says that there's no statistical data that technical analysis even works?
Well, that's a great question, because then I have to go back into my past and I say, hey, wait a second, I know a lot of people who use this and who have used it over 10, 20, multiple decades of success. And I think where people get really tripped up again is there's no differentiation between different forms of technical analysis. There are obviously like super, crystal ball type thinking technical analysis like Elliott wave, which will say, hey, we're going here, we're going here, we're going here, and then we're definitely going here. That's something that I don't believe in either. Technical analysis is a very broad term, is what I'm really trying to get at. And the more simple forms I've found are the most effective, especially with a lot of the guys who have been doing it for multiple decades. They actually used quite simple strategies, very, very simple strategies actually, where, you could learn something like that in, a couple of weeks, and all you have to do is just follow it, but just be consistent in following it. But for some reason, or not for some reason, I think it's just human nature to like want to do something more sophisticated, to feel like you're doing something more sophisticated. And that leads into like some very convoluted types of thinking where I would agree too. It's like, I don't see that this works, to be quite honest as well. So really have to differentiate between, what's classical technical analysis, some people can just look at support and resistance and just go off that. That's a completely fine way. Fortunes have been made doing that. Some people can just look at the recent trades list and they can actually make good trades off that. I know one guy who actually does do that. It's incredible. It's mind-blowing. But at the end of the day, the people in my experience who have been doing the more newer types of technical analysis, we'll refer to them as, try to do too much. So technical analysis, in the way that I use it, is not necessarily to predict the future. It's to just come up with better statistical probabilistic setups for myself to give me like a risk reward setup, just in the same way that a professional poker player would think about, is it good to play this hand or not, given what I know. So that's really the only way that I can do it. I'm not saying that, it's the end all be all. It's going to definitely make you, definitely going to win this trade. You can't do that. But if you have a very nice setup, then yes, I'm going to put a lot more, risk on that trade. So that's what it really comes down to, is just simple risk reward.
All right, Krown. So one argument that I've heard against technical analysis is that there's a lot of conflicting indicators where one will tell you to buy, another one will tell you to sell, and then some people also say with all the indicators out there, there's hundreds of them. like the squeeze mom and the whatever it is.
Squeeze mom.
Yeah, and the MACD or the whatever. But despite all these hundreds of indicators, they say that there's no one holy grail that'll get it every single time. So what's your response to those arguments?
You're damn right. There is no one indicator that's going to get it right all the time.
Yeah.
Otherwise, everyone would use it.
And what about conflicting indicators?
Conflicting indicators. Okay, so yes, you're 100% right, Angelo, and there's hundreds of thousands of indicators out there. And when you have conflicting indicators, well, that's the whole thing. It's like you have to find an indicator that works with your style. So all these indicators, they're all derived again from in some way price, volume, and time. So that means that they're also in some way related to each other. But we have to define in that sort of scenario, what is your specific strategy? Because there might be a strategy where it would totally make sense that you'd be a buyer, but on another strategy, it would totally make sense that you'd be a seller. And so, if you're using an indicator for, a different indicator for one of those, well, naturally they're going to disagree.
As a firm believer of technical analysis, would you, and having a ton of experience in it, would you say that it's more applicable to one type of market than the other? Like, let's say it's better for crypto as opposed to traditional markets, or it's better for forex as opposed to like commodities. What do you think?
Okay, yeah. So I've traded a bunch of different markets, and I would say from experience that at the basis of it, and if you're using it in the most classical sense, really, it's actually pretty consistent amongst all of them. And the reason why I think that likely is because we're all humans trading this. I mean, we're not like some sort of alien creatures. We all basically have the same emotional conditionings that we've had, for aeons and aeons and aeons, basically ever since we became anatomically modern Homo sapiens, hundreds of thousands of years ago, or however long that might be. I'm not quite sure. I'm a technical analyst, not a scientist. And again, I'm not a scientist, I'm an artist. So there you go. So my point is that people create these charts. One thing that I like to remind myself and remind people is we're not looking at a chart of Bitcoin. We're not looking at a chart of Ethereum. We're not looking at a chart of Litecoin, not a chart of gold, not a chart of Facebook. Name whatever asset here. We kind of are, but what we really are looking at is a chart of human emotion, like an emotional response to that. And human emotions are pretty damn consistent over time. Again, we've been dealing with the same sort of emotional conditioning ever since we became anatomically modern Homo sapiens. So that does show up in our decisions, and our decisions show up in the charts.
Okay, Krown, so thanks for joining us. Really appreciate having you here. Do you have any last minute words for people out there who are kind of on the fence of deciding whether or not they should start learning technical analysis? Because I know that with crypto itself is kind of a new industry, and so applying technical analysis is a new form of getting into crypto, right? So what would you say to, like, let's say your parents out there, well, not your dad, because he's, let's say my mom's thinking about, my mom or dad are thinking about getting into technical analysis, but they're just not sure, they're not fully convinced yet that it works. What would you say to them to kind of help convince them that it really does work?
Well, first things first, I want to thank you for having me on your channel. And second things second, what would I say? I've always found the best way is just personal experience. Go try it. Nothing, I can give you my opinion, I can give you my experience. Someone else might have a different experience. Someone else might tell you, hey, it didn't work. But for myself, I can say, hey, I do have history, I do have proof, and I actually try to visually show myself on my own channel, on my streams, of it actually working. So definitely give it a go, definitely give it a try. And I am very, very hard pressed to find anyone who's really studied this for, a decent amount of time, given it a good effort, who doesn't believe that at least there's something there, at least something good enough to get a better decision off of. Okay, cool. Yeah, and for those of you who are interested in learning technical analysis, Krown does have a channel in which he outlines not just beginner technical analysis
techniques, but also more advanced stuff. And he does have a technical analysis program that you can purchase, which I've purchased myself, and I do believe that it is one of the best investments in crypto that I've made. It's not a crypto itself, but it helps you with trading strategies and whatnot. It really opens your eyes to technical analysis, and it really shows you like how powerful of a strategy it really is. You'll be able to find links to his channel and his program in the description below, and by clicking up on the cards at the top right corner of your screen. And with that being said, thank you again for joining us.
Absolutely.
And if you guys have any questions, comments, concerns, if you want to learn more, I'll be linking to all this, like I said, in the description below. And he does have a Discord community too, where you can get in touch with him and talk to him directly if you have any questions or you want to learn from him directly.
Absolutely.
Yeah. That being
Come
said,
on over and hang out. Look forward to seeing you there.
yeah, thanks for joining us.
All right. Thank you, Angelo.